Hey, what's happening YouTube? It's your boy Zay here and welcome back to Only Hustling Game. Now just a quick fact, around 90% of you guys are not subscribed. So if you enjoy this kind of content guys, then please do me a favor, hit that subscribe button, that way you don't miss out on any future content. Now in this video, we're going to be talking about how you can easily invest in real estate through something called REITs. And I know I've talked about REITs before, like in this video up above, but as I've recently just been paid out my dividends for holding certain companies inside my portfolio, including some REITs, I thought it'd be time to make another video on them, kind of giving a full in-depth video and the attention that I feel like they deserve. So this is what this video is going to be about. And you know, if you've ever thought about investing in real estate, but you didn't want to deal with the hassle of managing a property, as well as with how crazy things are in the housing market right now, you may not have the down payment you're looking to get a bid on a property. So REITs might be a great alternative you should be looking into. So in this video, I'm gonna be breaking down exactly what a REIT is, the pros and cons of holding it inside your portfolio, as well as what kind of REITs I myself am personally invested into. So before we get into that though, if you have not yet started your investing journey into stocks and cryptocurrency guys, then please check out the links in the description below. When you sign up using my referral code when it comes to Webull guys, you can get up to 10 free stocks for just even putting 50 cents inside of the brokerage app. Now guys, that is literally free money. So go ahead and get that free money, man. You can keep it inside the trading platform if you want to, or you can sell those stocks and then collect all that free money. It's literally free money. And then also too, I left the link to the Gemini app in there, which is honestly became my favorite crypto exchange to trade cryptocurrencies on. And when you trade $100 worth of cryptocurrencies, you yourself can get up to $10 of free Bitcoin. So go ahead and check out those links. Now, let's go ahead and dive into what you came here for. All right, guys. So first off, what exactly is a REIT? So originally established in the 1960s by Congress to amend the cigar tax extension, a real estate investment trust is a form of stock that you can buy and is essentially a company that owns, operates, and manages certain real estate properties. So originally modeled after mutual funds, REITs pull capital from investors, which allows them to pay out high dividends towards their shareholders. These companies are legally obligated to pay back 90% of their income back to their shareholders. So this means that only 10% gets reinvested back into the company. And we'll talk about that in the pros and cons of it. The different types of REITs out there are equity REITs, and then you got mortgage REITs as well as hybrid REITs. So let's get into that first one right there. And the equity REIT is the most common amongst the REITs, and it basically owns and manages income produced in real estate through revenue from actually getting paid rent from these rental properties. And then the second one we got is the mortgage REIT. So this is one that lends out money to real estate owners directly through loans and mortgages or through the acquisition of mortgage-backed securities. Now these types of REITs are influenced primarily by something called net interest margin, which is just a fancy way of saying the spread between the interest they earn on mortgage loans and the cost of actually funding them. It's also worth noting that this makes them pretty sensitive to interest rate hikes. The third one, we got the hybrid REIT, which is basically a combination of mortgage and equity REITs. So pros of it, number one, is that it has a strong dividend payout and it does have the potential for long-term appreciation. Also, it's very easy to invest into versus compared to traditional real estate. And you know, there's no hassle of managing these type of properties as the companies themselves do it for you. And then number three, I would say, is the diversification for the dividend sector. So if you are, you know, chasing dividends and that's something that you're really looking to build upon to bring income in, whether that's through retirement or through just a normal brokerage account, then this is a great way to diversify that. You know, you got blue chip stock companies that pay out dividends, but REITs are also a great alternative as well. So some of the cons, like I said earlier, is, you know, they are legally obligated to pay their shareholders back 90% of what they make. So that means only 10% can get reinvested back into the company, which means that they don't have a lot of capital to kind of grow. And so that kind of leads into con number two, which is in the short term, you know, they don't have a whole lot of potential for growth. but in the long term there is potential for growth. So it's just one of those things to where, you know, you won't see, if you invested $10,000 today into a REIT, you won't see within the next, you know, 1 to 3 years a whole lot of growth with that $10,000 invested, because then again too, they don't have a whole lot of capital to invest into them. And then con number 3 is the dividends are taxed, of course, just like any other dividend. You know, those are going to be taxable incomes unless you hold it inside some kind of retirement account like your Roth IRA. To the REITs that I myself personally own is, so when we take a look first off at AGNC, one of my favorite REITs out there, we can see that on tip ranks it shows that, you know, it has a high estimate of going to $17 with a average price of $15.54 and a low estimate of $13.75. It's a moderate buy, and it does have a smart score of 8, which means that it is highly likely to outperform the market. And then when we go over to STAG, we see that it has a high estimate of going to $54 and a average price of $47.71 and a low estimate of $43. 20.72% side to the upside, which is pretty good right there. And it also has a smart score of 7. It's on the neutral side on the smart score. And then the last one we're going to look at is PSEC. So there are no analyst forecasts for PSEC, but there is a stock analysis for a smart score of 8. So it is highly likely to outperform the market. And these are just 3 different real estate REITs out there, guys. There's a whole lot of other ones out there that you can dive into and take a look at. But, you know, it's just one of these things to consider when looking at your stock portfolio. And 2, if you've ever been interested in real estate, this is a great alternative too, guys. I mean, of course, it'd be great because, you know, you can do a whole lot more with actual real estate versus these stocks, but then again too, it does take a lot of the hassle and headaches out of managing an actual property. So it's a good way to diversify if you are looking to get into the real estate field, you know, and actually acquire real estate assets and different kind of properties like that. Maybe getting into stocks through REITs is also a great way to create diversification inside your portfolio. So something to think about there for sure. So I hope that kind of gave you a kind of full dive on some of the REITs and gave you some great information. That way you can make an informed decision on whether or not they are for you. Just remember, guys, that the dividends that they pay out through their high dividend interest is taxable income unless you hold it inside some kind of retirement account such as a Roth IRA. And also too, just remember that, you know, in terms of short term, there's not much room for capital appreciation because there's only able to invest 10% back of their earnings inside the company. So yeah, I hope you guys enjoyed that video. It's your boy Zay, bring your only hustling game, and I will see you guys in the next video. Peace.